Everyone loves traveling, right? So if you get a chance to go to US tomorrow, what would be the first thing that you will be thinking about? How much amount of Indian rupees I have to spend to get dollars? If I tell you, you have to just give 7.86 Indian rupees to get $1, won't you be surprised and happy? But unfortunately, this was the exchange rate of Indian rupees and dollars way back in 1970s and 80s. But now, if at all you want to exchange your Indian rupee for dollar, you have to spend about on an average 85 Indian rupees. And let me tell you one more thing. Can you believe if I say that only 1 in 100 of us had access to telephonic connections way back in 1970s and 80s. But now, what is the tele-density that we have? It is more than 85% of the population. And talking about the literates in India, less than 1/6 of Indian population were literates at that period of time. But now we have more than 69% of adult population as literates in India. And the most important thing that I want to highlight here is India is marching towards becoming $5 trillion economy by the year 2025. Okay, have you ever thought of what was the value of India's GDP before 1990s? So today's session is going to be very interesting, full of stories where I'm going to explain about the conditions that prevailed in the Indian economy before 1990 and how it has led to a crisis situation. See, for example, we had Sri Lanka and Pakistan recently facing so much of economic crisis, right? Something of that sort happened in India also, and how it led to the reforms that we took, that is nothing but the LPG reforms: liberalization, privatization and globalization. This reforms actually stood as a major milestone for India, which drastically changed the development strategy, and what we are today is something because of this particular reforms that we took in the year 1991. So stay with me for the next few minutes where I'm going to discuss with you this chapter from your Indian Economic Development NCERT, that is liberalization, privatization and globalization reforms. The main agenda for today's discussion is going to be studying the background, that is the conditionalities that pushed India towards these reforms, and what are the mechanisms with which we adopted these reforms. When we say liberalization, what does it mean? So what is mean by privatization? What is globalization? And of course, the impact of LPG reforms on the Indian economy. We are also going to make an appraisal of these reforms in terms of its achievements and drawbacks. So without much delay, let's get into the background of economic reforms. Here, I would like to begin with a small story. After getting independence in 1947, India adopted a mixed economic system. So, what is meant by mixed economic system? In mixed economic system, we have the role of both government as well as the private players in producing goods and services, right? So the privates will produce goods and services which are having demand in the market, or which they feel that if produced can be sold. But what will the government do in mixed economy? In mixed economy, the government will make sure of production of goods and services needed to cater all sections of the population, so as to take care of the basic needs of the people. So this is the important role of the government when it comes to mixed economy, that is taking care of basic needs of the people. And in addition to that, the government will also control and regulate the market. The government will take measures so as to prevent the price from rising to a very high level, so as to make everything affordable in the country. So that is why the Indian government was given a upper hand because of choosing this mixed economic model. So this is a background of Indian economy, how we started. But then how it resulted, actually there are two set of views. One set of people say that the excessive control and regulation taken by the government so as to protect the people in mixed economy has actually led to slowdown, and it also hampered the growth. So what was the result of it? According to one set of people, they say that it has led to slowdown, and in fact it hampered the growth as well. But the other group of people also say that this kind of mixed economic system with excessive control and regulation has also paved way for increase in or growth in savings, diversification of the economic or the industrial sectors, and also we were able to achieve the food security. So this is the background, and this is the two different types of views with which the Indian economy actually started to perform from 1950 to 1990. So this is all written here. But what happened in 1991? In 1991, India ended up with having an economic crisis. I think you will be familiar with the crisis we had recently in Sri Lanka and Pakistan. Similarly, India also had a severe economic crisis in 1991 because of the outcomes of the policies that we had taken before 1991. So now we are going to discuss about the important reasons that led to the economic crisis. Okay, fine. So when I say that India was having economic crisis, what does it mean? Before going into the background, let me clear that. So economic crisis is something that can be marked by all these conditions. So first thing, we can say that the economy is going through a very high rates of inflation. Okay, so we can say that an economy is in crisis if it has a very high amount of fiscal deficit. Okay, we can say that if a country is having so much of external debts to repay but without any proper sources for it, and if it is going to bankrupt, in that case we can say a country is in economic crisis. So these are some of the markers to indicate that India is actually, it is applicable to any country, it is actually having a financial economic crisis. Now coming back to the economic crisis of India, which we had in 1991. So what were the major reasons for the economic crisis? First, we will start with borrowings. Okay, so the government had excessive borrowings externally and it was not able to repay them. So that is the first thing that you have to remember. We will come to why it borrowed, all those things in a while. And second thing, the most important thing for having economic crisis in 1991 is because of falling foreign exchange reserves. That is the foreign currencies that we have as a reserve, so as to make our external payments for imports, payments for other stuffs and all those things, that was again falling. And third most important thing is that we were witnessing rising prices, especially the price rise of essential commodities. So all these conditions were the major reasons behind 1991 economic crisis. And we also had inflation. Okay, so the amount of the percentage of inflation rose from somewhere 6.7% to 16.7% shortly. Okay, so this is the amount of inflation we had. And talking about the government borrowings, almost 38% of the total government expenditure was made for repaying the interest and the loan amount alone. So can you imagine the amount of loans that we took at that period of time? I will also tell you one more example. RBI went for selling millions of tons of gold to the other countries' investment banks, to the other countries like Bank of Japan, Bank of England, etc., so as to get billions of dollars as the loan amount. So what are the conditions that actually led to these type of situations that ended up in the crisis? So next we are going to discuss them in detail. let's start with government borrowings. So why did the government go for higher amount of borrowings? It is because the government was not able to meet its expenditure. Why? The government's expenditure was greater than the revenue that it was earning. So why did the government was not able to meet its expenditure? The government needs to make expenditures for fulfilling daily administrative needs, for coming up with various kinds of development programs and all those things, right? For that, government needs money for spending on the social sector and everything. But now, from where do the government will get the money from for meeting all these expenditures? We have two main sources, right? That is the tax source and the non-tax source. So we pay government, we pay tax to the government. That is the income for the government. That is the revenue for the government. And we also pay fines, fees, everything, etc. to the government. That is again the income to the government. In addition to that, the government can also lend money, right? So it can earn through interest payments, and government is also operating so many public sector units. So from where the government can also get its revenue. But just imagine if the amount of revenue that the government is having is very less than the expenditure that it has to make, and obviously the government will run short of money, right? So that is the condition that we call as the fiscal deficit. That is a term which indicates how much amount of shortages we have to meet the expenditures. So one thing is clear: in what condition the government will have fiscal deficit and go for borrowings. And second thing, tell me, is this okay to do? Is this okay for the government to go for borrowings to, spend? It is okay for the government to go for borrowings to meet its expenditure? Of course, yes. Whenever the country is going through problems like poverty, unemployment, population explosion, then it is obviously, yes, the government has to go for borrowings. But then tell me, will the government be able to, generate sufficient amount of investments, sufficient amount of revenues out of the expenditure the government is going to make? Not immediately. So whenever the government is spending so much on the social sector like health, education, etc., then definitely it will take some time for these sectors to pay back. If the government is spending on the education of a child, the child has to grow up to become an adult and then probably get into employment and then probably contribute to the economic activity. If the government is going to spend on the defense sector, then obviously we cannot expect returns, right? So these are certain types of government expenditures which will not give immediate amount of returns. So the government at one side has to go for higher expenditures, and the government is already having less amount of revenue generated because of less tax collections, okay, because of these sectors not able to pay back immediately because of poor performance of the public sector enterprises. Clear? So these are the situations that favored government to go for higher borrowings. But now tell me, if the government is actually going for borrowings, it should also create some sources for meeting the demands for resettling the principal or the interest, right? But unfortunately, Indian government was not able to do that because we did not have open economy. That is, we did not have free flow of goods and services between the countries. We were importing goods, but we restricted the exports before 1990. Okay, so exports are something from which the government can earn revenue. So we did not promote exports at that period of time, but we were obviously making imports of crucial items into the country. So whenever we make imports, say for example oil imports, what do we have to do? We have to spend money, right? So when the imports of the country is higher, obviously the country will need huge amount of forex reserves to meet the import demands, because whenever you buy something from the other country, you will pay in the dollars, right, or in other countries' currencies. So because of having higher imports at that period of time, and because of having lower exports comparatively, the reserves that we had with us were falling. Okay, so this was marked by falling of reserves. The import cover was very poor at that period of time. We had money, that is, we had foreign currencies only for meeting the import demands of next 2 weeks at that period of time. So this was the situation that actually reduced the forex reserves of the country, which again reflected in not being able to pay back the external debt that we took from. And then talking about the rising prices, so inflation was also one of the important role that played during the early 1990s or 1980s or 70s maybe, because of which the country was struggling so hard to control the prices. It can be marked by again, rising prices of imports, and government was not able to meet its revenue targets and everything. We'll talk about that separately. So these are the important conditions or the backgrounds which you have to remember that as a reason for the 1991 economic crisis. So we also had higher fiscal deficit at that period of time. In addition, we also had some external conditionalities like Gulf War and everything going on, which also made India to go through this kind of economic crisis. So now, what did the government do after this? What did the government do after this? It went to the World Bank for getting loan. I'll tell you a very interesting story here. So when the Indian government approached the World Bank, or when India approached the World Bank to take loan so as to deal with the economic crisis, the World Bank, the IMF got upset literally. Why? Because this was not the first time that India went for, getting money to solve the crisis. We already had 2 series of BOP crisis happened in India. Okay, so these are the stories that I think you need to remember. So one BOP crisis, the first BOP crisis in fact started immediately after the first year of we launching the second 5-year plan. So India had its first BOP crisis in the year 1956 to 61. It is mainly because of the heavy industrialization policy that we had, which was again backed by deficit financing. Why? Here the government wants to borrow and spend more for rapid development of industries. Again, the borrowings is done to fulfill the import demands. So when we go for rapid industrialization, obviously we need technological inputs, we need industrial raw materials also, so which was again imported. So this is something which you have to remember. And after this, we again had another BOP crisis during the Gulf War and all those things. Okay, but these two crises were not that severe as compared with the 1991 crisis, but still IMF is not ready to give the loan to India unless and until it is, having some conditionalities in place so as to prevent India from coming back time and again to get the loan. Yeah? Okay, so what were the conditions imposed by the World Bank to the India so as to get the loan amount? It said, go for an open economic model. It's enough that you did not promote your exports, but now open up your economy. Allow free flow of goods and services. Open up your economy by removing all type of restrictions, tariffs and duties, whatever that you have, so as to prevent the free flow of trade. And second most important thing is try to generate sufficient amount of reserves in your country so as to not, again get trapped into this kind of situations. So how can we generate sufficient amount of forex reserves? By attracting investments. How can you attract investments in the country? By removing the restrictions. Did we have any restrictions? Of course, yes. We had, tons and tons of restrictions in place that actually prevented the free, flow of capital from different countries into India. So now the IMF is very concerned. IMF is very worried. It really wants India to go through a whole range of reforms, that is economic reforms in terms of liberalization, privatization, that is removing the control of the government, allowing the privates to participate freely and attract investments and do all sort of things, and please don't come back again. So these were some of the conditions levied by the IMF at that period of time, and then India was able to get the loan and solve the crisis. So what is the outcome that you have to remember here? Now we are moving towards the new economic policy as a major outcome of this 1991 BOP crisis, where we are going to study about the economic reforms and the mechanisms in detail. So let us start with the first important reform that we took, that is liberalization. So what is mean by liberalization? It is simply relaxing the rules and regulations. So why do we have to relax rules and regulations? So as to enable the free participation, so as to enable the people to participate freely in the economic activity, contribute, come up with industries, set up industries and everything. So as to end up the restrictions that we had and diversify the Indian economy as much as possible. Okay, fine. And talking about the liberalization, we came up with relaxing the rules and regulations across different economic sectors, starting from industry. Okay, so we came up with liberalization measures across all these elements. Industries, we came up with some liberal forex reserves management system. We came up with some liberal tax measures, that is, we had some tax reforms under the liberalization. We had some reforms related to trade and investment. We had some reforms related to foreign investments, etc. So entirely all these sectors of economy went through the process of liberalization. So now where we will be discussing in detail about what was the condition that prevailed in each element of the economic parameter that we discussed right now, and how did it change after the reforms. But before that, I have an interesting announcement to make here. You can now get the UPSC CRC subscription for just 24,999 rupees using my code RIYA50. So this is going to be something very, very helpful for all of you, because we have a wide range of benefits and results already accomplished through similar courses. So you will be able to access the classes of top educators from an academy, where you will be able to join the batches like Liberty 2025, RM batch 2026, which is the English batch. This is English, and you also have an exclusive Hindi batch as well. So I suggest you to subscribe to an academy UPSC CSC immediately and get all these set of preparation done easily. And now moving forward to liberalization in the industrial sector. See, the industrial sector was having so much of rules and regulations. The Industrial Policy Resolution of 1956 classified industries under three heads. One is something which is basic and strategic, and it was exclusively controlled by the government, which means the areas of basic or the strategic industries were run only by the government. Privates were not allowed to operate in these type of industries. And then we had incrementally owned industries. So here the government and the private were jointly operating. And last but not the least, it is the consumer industry. Here it means these are the industries allotted for the privates. So the privates can exclusively operate under these industries. So this is how the classification was made. What is the problem in this classification? As you can see here, the amount of industries under the basic and strategic character was very high when compared with this private sector industries. So this was something that actually prevented the participation of privates, prevented the privates from opening up many industries. So this is not the only thing we had. We also had a very important thing in place that restricted the free operation of the privates, that is the system of licensing. I think every one of us would have been told by even our grandparents that India had the system in place that is called as licensing. So it is a kind of system that will enable you to get permission from the government, if at all you are a private player, to set up industries. it is not just for setting up of industries but also for deciding, okay, whether, I mean, how much amount of goods and services that have to be produced and what would be the prices that it can have. So all these kinds of upper limitations were also set up. So the licensing is needed not just for opening any industry, but if at all you want to close any industry also, you need licensing. So this was something that prevented the opening up of so many industries by the private players, because it is not that easy at that period of time to go and get the license. Okay, so this is something which you have to remember about the industrial sector conditions before the liberalization measures. But now, how did this liberalization initiatives change the setup? The only thing that you have to remember here is 4 Ds. You can simply remember it has 4 Ds. One is the liberalization aimed at removing the restrictions in place. So it went for de-licensing. As I told you, this licensing was a major hindrance for the growth of private sector industries, right? So we went for de-licensing and then de-reservation. In addition to licensing, the government also reserved some of the industries exclusively to be operated by the small scale industries, right? And then that is again something, okay, removed as part of the liberalization mechanisms. And then government went for decontrol and deregulation. That is giving more autonomy to the industries to operate on its own. That is, giving up setting prices and all those things. That actually enabled the industries to witness huge amount of positive transformations, about which we will be studying shortly. So this is all about the reforms taken in the industrial sector. Now let's move to the financial sector. See, financial sector was again under the excessive control of RBI at that period of time. So RBI was something that was deciding how much amount of cash reserves a bank should have, how much amount of, what is the percentage of interest that a bank can charge on its loan. So all these types of restrictions and regulations were made by RBI at that period of time. So again, it hampered the growth of the banking sector. So what did the liberalization measure do? Here, it transformed the role of the RBI from being a regulator to a facilitator. So now the RBI is not a regulator but a facilitator. It means that the banks were allowed to decide or to make certain decisions on its own without having the banks to confirm it with RBI. Say, for example, deciding the interest payments according to the limits set by the RBI, within the limits set by the RBI. And the RBI also allowed the investments to increase to 50% from outside countries in the banking sector. Okay, so these are some kind of initiatives taken by the RBI so as to liberalize the banking sector, and as a result the bank branches increased. We had so many private banks coming to India, and we also saw some kind of improvements in increasing the banking branches as well. So these are some things that you have to remember about the financial sector reforms. We started to witness huge amount of investments coming into the financial sector. And now moving on to the tax reforms, you have to remember this, that the amount of direct tax collection in India was very less when compared to the total amount of indirect tax that we collected at that period of time. Say, for example, if we had 19% of the tax revenue from direct tax sources, we had 81% of the tax resource from indirect tax. So this is something that can pave way for inequality, right? Because for any country, the direct tax should be more than the indirect tax collection. Why so? It is because direct tax has something to do directly with reducing the inequalities that is existing in the country. But that was not the case with India back then. And to add to this, India was also having a very high rates of taxation. For certain categories, we had the tax slabs to be as high as 90% also. But then imagine, will people be paying taxes if we have this much amount of higher tax rates and all? Obviously no, right? So because of the loopholes and because of the higher tax rates that we had, the government was not able to generate sufficient amount of revenue from the tax sources. uses. So as part of the tax reforms, we did these things, that is to reduce the tax rates and also simplify the tax rates. Reduce the tax rates and simplify the tax rates. So these were the two important measures taken by the government as part of the tax reforms. And moving forward from here, as foreign exchange reforms, what did we do? We tried to increase our forex reserves. So how did we try to increase our forex reserves? That is, we have to now earn foreign currencies by promoting exports. You have to open up your you have to open up your economy to allow free flow of goods and services. And if you have to promote your exports, what do you have to do? Remove the restrictions to reduce your tariffs aimed at restricting the exports. Okay, also you should allow the imports to take place, right? So if you are setting up higher amount of tariffs so as to reduce your import, but then if it is going to be a critical item which your country definitely has to go for it, then obviously it will lead to increase in price of importing goods, right? So here we have to remove the quantitative restrictions that we have on imports as well. So India did something of this type. We went for removal of quantitative restrictions that we had in imports and all those things, as part of which we were able to maintain sufficient amount of forex reserves. So here we also came up with devaluation. So that is something which we can discuss here. So to promote exports, what did the government do? The government went for devaluation. Okay, so what is mean by devaluation of currency? Here the government through RBI will voluntarily reduce the value of Indian currency with respect to the foreign currency. That is, if $1 was 85 rupees yesterday, the government will voluntarily increase the exchange rate to this so as to decrease the value of Indian rupees. That is, now the $1 is 90 rupees. So what is happening here? The Indian value is getting decreased, but how it is going to favor the economy? Just imagine if you are an exporter, okay? So for every dollars that you get, you will be able to, exchange it into the Indian rupees. But now, if the Indian rupee value is devalued, for every $1 you earn through your exports, you will be able to get 5 rupees extra. Okay, yesterday you will be getting 85 rupees, but today you can get 5 rupees extra. As a result of which, as an exporter, I get promoted. Clear? And how it is going to affect the importers? It is going to affect the importers. Why? Because for every dollar that they need to purchase any product, they have to spend 5 rupees more to get $1, right? So this is all the trade tricks that we follow so as to, enable or promote exports and do all sort of things. So this is something which you have to remember when it comes to trade. Okay, we also removed the restrictions, we also removed the tariffs and everything. And talking about the investment policy reforms, see, India wanted to attract investments, right? So India, if at all it wants to attract investments, again it has to go for liberal rules related to investments. See here, so talking about that, we can say India actually went for allowing the entry of external commercial, paving way for external commercial borrowings and foreign portfolio investments. See, India did not have foreign portfolio investments before 1991 reforms. What we had was just FDI. But now these two elements were in place. India also allowed the corporates to, the companies from India to go and borrow loans from abroad. Earlier, this was not the case. Only the Indian government was actually getting loans from abroad. But now, it includes both the private companies as well as the public companies. So by means of having external commercial borrowings in place, the government enabled the companies to go abroad, go outside India to generate funds also. By means of which we had actually witnessed a huge amount of inflow of foreign capital into India. So this is all about the liberalization measures we took so far. Okay, so liberalization across all sectors of the economy, starting from industry to tax reforms to forex reforms to trade and investment policy. Done. Now let's go to the privatization segment. Clear? So what is basically privatization? That is making a company under the control of private. So what they are going to control? They are going to have the ownership and managerial control of the company. That is, they are going to have the autonomy. When we talk about privatization, it means that the government is going to reduce its ownership, or the government is going to reduce its share to such a level where it is giving space for the privates to make managerial decisions, to have autonomy, and to enable them to invest so much, enable them to operate with efficiency and everything. So if a government is owning any particular company, if at all we say that it is getting privatized, it means two things. That is, the government can do privatization under two mechanisms. If the government is reducing its share to, somewhere less than 50%, then that is something called as a strategic disinvestment or a strategic sale. Okay, so here the government is completely privatizing this. The government is going for a strategic disinvestment where it is reducing the total number of shares owned by the government to less than 50. So it means that the government no more owns majority of the shares, right? So here the ownership and the control is automatically going to the privates from the government. And if the government is making any kind of disinvestment where the government is actually reducing its ownership, but still it is able to retain the majority of the shares. Okay, say for example, if the government is having 80% shares, after going for disinvestment, it is having 70% or of share or 60% of share, or somewhere not less than 50% but greater than 50% of the share. In that condition, the government is going to have the majority share. So this investment is called as a minority sale. So what is this investment is called as? It is called as minority sale. Clear? So these are the two mechanisms with which we can actually go for disinvestment. And again, what are the objectives of having privatization in place, or why do we have to have this privatization at first point? It is because the government is actually not having enough of resources with it to expand. Okay, the government is not having enough of resources so as to diversify it, operate with efficiency, not having enough of resources to get technologies from across the world, right? So whenever we give certain things to the privates, then it is easy for them. Then it is easy for us to expect good quality of service from them. Why? Because they are investing more and the government is not able to invest more. So this is all about the privatization. We can have higher flow of capital, we can have higher flow of technology, we can have high efficiency in results. So this is again something going to create increased competitiveness with the domestic players also, the government companies also. Just imagine whenever there is no competitor, the efficiency will be very less, right? And that was the main result for the PSUs of India to perform poor and not yield enough results. So this is all about privatization. And now moving forward from here to the globalization. Globalization is simply nothing but the outcome of liberalization and privatization, right? So it is actually integrating your domestic economy with the foreign economy, whereby you are allowing the free flow of goods and services. You have the markets of all different countries in India and also the markets for Indian products across all different countries. So one of the important thing that you have to remember about globalization is the outsourcing. It attracted huge amount of outsourcing opportunities for India, where the Indians will be hired for, or the Indian companies will be hired for having certain services to get done. So this is mainly because of the large scale population that we had and the cheap amount of labor. So this is all about globalization, nothing much. But what you have to focus more is about the appraisal, whether this LPG reforms were able to transform India's development strategy, or whether it led to a kind of issues that still remain across all sectors of the economy. So this is something which we have to know now. Obviously, although this liberalization liberalization, privatization, globalization has paved way for a major transformation in the economy in terms of GDP, where the average annual growth rate of GDP after the reform period was 7% instead of 3.5% in 1980s. Okay, even the reduction in the value of fiscal deficit to somewhere about 5.6 percentage now as compared to the 12.7 percentage of GDP, etc. We also had some of the issues. So first let's start with the issues and then we will go back to the positive things favored by this LPG reforms. Let's start with GDP. Of course, we can see that the GDP of India in the year 1975 was growing at the rate of 7.9%. But then in 1983, the GDP was 7.29, growing at the rate of 3.8%. And after the reform period, okay, that is in the year 1991, the GDP of India was growing somewhere from 5.6% to 6.4%, that is increase in 1.1%. Clear? So we can say that the GDP of India has actually increased. And talking about the post-reform periods, now we have about a 7.6% of growth in GDP and all those things, right? Okay. But then what happened to the foreign investments? The foreign investments were also increased because of the free flow of, because of expanding the scope of foreign investments in India, allowing foreign portfolio investments, institutional investments, etc. You can see here it was just $100 billion in the year 1990 to 91, which was increased from 100 billion to 150 billion in 2003 to 2004. Talking about the forex reserves, we had $6 billion of forex reserves with us in 1990 to 91, which was again increased to $125 billion. Yeah, fine. And then moving on here, although India was able to have increased GDP, it was not able to generate sufficient amount of employment opportunities, and that has resulted in a condition of jobless growth, about which we will be studying in the coming lecture. Okay, and then talking about the agriculture, although the agriculture sector was not given that much importance in the reform period, after reforms also it did not witness any kind of series growth. Why? Because we reduced the investments in agriculture, especially in terms of irrigation, and because of having LPG reforms, we started to produce agricultural goods for exports also. So these are some of the concerns we had with respect to the agriculture sector. And talking about the industry, although we had diversification of industries, although we had privates getting full freedom to operate in the industrial sector, because we removed the licensing, right, except for cigarettes, alcohol, industrial explosive, etc. So almost all sectors did not have license. We just went for delicensing. So although all these supported the industrial sector, it affected because of transforming into an open economy, in terms of it not able to face the competition from the foreign competitors. Why? Because we are totally new to it. So our domestic players were finding it difficult to compete with the foreign players. And second thing that I have to tell you here, we went for import restriction, removal of quantitative restrictions on imports, right? But that was something not reciprocated by the other countries. They still had higher tariffs for the products getting exported from India, as a result of which India was not able to actually meet so much amount of benefits that it otherwise would have been made. So these are certain things that you can remember while talking about the industrial sector. And talking about disinvestment, it was often criticized that the government undervalued the PSUs and sold it. And when the government went for disinvestment, the amount that it received through disinvestment. See, why do the government has to go for privatization, disinvestment? One thing, to support the participation of privates or encourage them. And other thing, when the government is literally not having the money to run it, or if the government wants to generate funds for other kind of activities, it will go for disinvestment, right? So now what happened was that after the 1991 reforms, the amount of money which the government raised through disinvestment was not actually used for the development activities, rather than to meet the expenditure like repayment of loans, this, that, and all those things. So this is something that you have to remember about disinvestment. And now, reforms in fiscal policy, although we came up with certain reforms, we did not, were able to witness a huge transformation in terms of tax payments or in terms of reduction of fiscal deficit and all those things. It happened gradually. So the fiscal deficit was somewhere about 12.7% back then, but now it is 5.6%. That is the target for the next year. So this is the level of transformation happening in the fiscal deficit scenario of India. Okay, and then so this is something that is going to end the drawbacks of this LPG reforms. Now let's talk something positively about this LPG reform. So it paved the way for higher economic growth, that is in terms of GDP. We can say that the average growth of GDP was about 7%. Again, it allowed free flow of foreign investments into India. Okay, we were able to get the technological input, we were able to get the managerial inputs, we were able to generate sufficient amount of employment because of having this kind of physical FDI in place. So all these things supported India's economic growth, and then we were able to reduce the fiscal deficit, and then we were able to reduce poverty, we were able to generate sufficient amount of employment, but again not immediately, after some period of time. We were able to actually perform better in the international market in terms of exports also, because we started to promote exports. So the percentage of exports from India increased from 0.5% to 2.6% right now. So all these conditions are actually favoring India to march towards the $5 trillion economy. So I hope this is something that can be achieved, and let us see what is going to happen. So if you have any comments to say about whether India will be able to achieve 5 trillion economy or not, please drop a message in the comment section. See what are the conditions that is going to favor and what are the hindrances we have to take care of it. So that's it for today. We actually done with this LPG chapter. In the next video, probably we will see the next chapter that we have, that is growth and unemployment, which is again going to be very interesting. So this is about the UPSC CSE subscription. There is an offer that is going on. Okay, so you can use this code RIYA50 to get access to all the important courses. There is a plus courses for UPSC for just rupees 24,999, where you will be having the top educators taking classes from Unacademy. Clear? And you will be able to access all these courses starting from Liberty English batch, RM English Foundation batch, and a Hindi batch. Okay, that's it for today. Thank you so much for watching. If you like this video, please like, share, and comment. If you have not subscribed to UPSC Warriors channel, please subscribe. Thank you so much for watching, and stay tuned with us for more updates. Take care.